Next on our list is Petmin, which is an interesting company. It's principally two operations. The one is an anthracite mine called Somkhele, which is down near Richards Bay, and that's not a bad little operation. The other part of it, though, is an interesting iron ore deposit up in Canada, where there is apparently lots of cheap electricity, and they're developing a pig iron smelting operation and so on and so forth. It has a couple of interesting CEO and chairman people. Bradley Doig is there. He's the development director. He was on CNBC Africa yesterday. Ian Cockrell, who's an ex-Anglo man, is also involved. 767 million rands worth of market cap. Price to earnings ratio, and I think this is on yesterday's numbers, is 5.4 and dividend yield of 3.76. So they've gotten rid of some of the other operations they had. They were going to spin off the iron ore thing in Canada, but they didn't. They've kept it inside of the listed entity.
They've in fact bought more.
That's right. And they're now saying that they're proceeding with that. Yeah. So they must have some very significant price advantage.
Producing pig iron is different from producing steel.
Okay.
So it's a little bit more specialized, a little bit more value added. And it's not just iron ore. They actually do mineral sands there as well, as far as I understand. But they make pig iron as
and then what do you do with pig iron? Do you turn that into steel somewhere further down the line?
Somewhere further down. Look, I'm not a metallurgist, but yeah, it's not your common or garden variety steel. There is more value add to it. And then, of course, the anthracite mine has actually done quite well. But understand, they are aligned to steel. I mean, they in quite a few aspects of steel.
Because that's what the anthracite gets largely used for. It's for manufacturing specialty steels. You add it to the blasting process in order
and it's used extensively, and in fact, in quite short supply worldwide. So the anthracite mine has actually had a spectacular year.
But some of the South African anthracite gets exported to Brazil.
A lot gets exported.
Used there as
so
well.
that is in relatively short supply. And their last set of results were not bad at all, quite frankly.
This is we saw now. Yeah, they were putting a lot of emphasis in that in Bradley's interview yesterday. He was saying they've cut costs a lot, which seems to me one of the best things to do in an environment like this, when you know the market isn't going to reward you for any kind of earnings growth, and it's tough times out there and people are negative.
Costs, you try and get way down the cost curve so that when it all eventually turns, which it will, you're one of the survivors. You're not a casualty.
Look, I know this is really digging out the back end, but in Canada they have all this hydropower, which is environmentally sustainable and cheap. There's potentially a change of government coming in Canada. The Conservatives have run Canada for the last 15 years or something. It looks like they might lose this election. I suppose at the margin that's a potential risk when you've got a big project like that and you're having a change of government.
But Canada needs resources. That's Canada. I mean, the Canadian dollar's been weaker than the rand.
I suppose it is Canada you're talking about. So, you'd be more confident about a project continuing with a change of government in Canada than you would if it was in the Congo.
Yeah, somewhere else like that, yes. But look, once again, the same stories.
Yeah. So there it gets right up there, 3 rand and above. So it's kind of drifting around 1 rand 30 or something, looks like the current share price.
But these are, they do own good assets. And the pig iron asset in Canada, we'll have to see what happens. It's still being developed. But the anthracite and the other interests are actually very, very good interests. But the cycle.
So going hot, not? Yeah. I'm also going to avoid, much as I think they're doing a solid job there.